Just recently, Charles Schwab has announced that they're going zero commission stock trading, which is amazing. And Robinhood's response to this? Now, as a result, other investment brokerages have decided to follow and drop their fees altogether, which is amazing news for us, but it makes me wonder, these have been the giants of the investment world for so long, and a significant portion of their revenue has come from charging us fees to buy and sell stocks. So in this video, I want to explore exactly what this means for those guys. What does it mean for us as investors? What does it mean for Robinhood? Because I think they're about to get hit the hardest, because we're about to be faced with a pretty tough decision. Should we stay, or is this really the end of Robinhood? Hey, what's up guys? My name is Andrei Jikh. Welcome back to today's video, and I'm so excited because the battle has finally been won and Sauron has been defeated. You know, it's crazy to think that 15 years ago, these brokerages used to charge us as much as $30 for trading and buying and selling stocks. Now, some of them have evolved and others have decided to stay behind and continue charging fees. So for us as investors, instead of paying $4.95 at Charles Schwab, we're not gonna pay anything, but if you're an options trader, you're still going to pay 65 cents per contract. Now, am I gonna make the switch finally from Robinhood to Charles Schwab? Well, let me take you back and share with you a story. In 2014, I was at the peak of learning how to be comfortable with dividend investing, and I just started to build my portfolio $1 at a time. And that's when this little app called Robinhood popped up on my radar. You had to sign up and be on this waiting list. So I eagerly did that. And the promise was very simple. You could buy and sell stocks for free. Now, you have to understand something, because at that time, that was completely unheard of. When I started investing as a young kid at 19 years old, I did not know how the stock market worked. I didn't know which brokerage to use. I didn't know how much money to invest, let alone which stocks or companies to invest in, or that the stock market returned 7 to 9% per year. What does that mean to a 19-year-old kid? Just random numbers, right? All I knew was that I had $50, disregard this 100, and I knew that investing was a good thing, that it would grow your money, and that the stock market doubles every year, right? That's how it works. I didn't know what I didn't know, but that's how I got started. So you can imagine how much money these brokerages have made from people like me for so many decades. But like I said, I was young, and $5 per trade, that sounds reasonable, that's cheap, I've got 50 bucks. But what I didn't know was that $5 out of 50 represented an immediate 10% loss on my investment, so now my 50 is worth 45. But so, what does that mean? If I have no experience and nothing to compare to, that 10% means absolutely nothing to me. So I was clueless, and everyone that I asked was equally clueless. But it was then when I realized that I needed a lot of money to really start investing, to the point where that $5 just becomes insignificant. And that is somewhere between $1,000 to $2,000. Not a lot of 19-year-olds or 50-year-olds have that kind of money to just start investing. So back then, Robinhood was such disruptive technology, because it allowed people like me to make mistakes without paying for it too much. But now these giant brokerages are coming back. Now, while everyone is super happy, what do you guys think this has meant for these brokerages' stock prices? Because when I asked Corey, she said, oh, this is great news. Stock prices must go up, right? Nope, the stock prices fell really hard. Let me share some numbers with you guys. Charles Schwab in the last week has fallen 12%, going from $41 to $36. Another popular option, ETrade, in a lot of trouble. They fell nearly 20%, going from $43 down to $35. And lastly, TD Ameritrade had the worst day in the last 20 years. They have fallen 24% from $46 down to $33. Now, TD Ameritrade is in the biggest trouble right now because they don't have their own mutual funds or ETFs. That means they can't make profits from the expense ratios, and 36.1% of their profits are coming from commissions and fees. Yes, I've checked, exactly 36.1%. And the fees and commissions and the profits that they generate from them are about to go away. Now, as Bob Mainery would say, this is not good for Briga, the Olympics. Sorry, I've just been binge watching this guy. I just found out who he was. It's hilarious, but I will say right now is not a good time to be an investor, but it's a great time to be a client. Now, despite all this bad news and all these stock price drops, things are about to get shaken up even more. When people ask me, Andrei, when do you consider selling a stock? And I consider selling a stock when one of two things has happened. Either A, the dividend is about to be cut or is in danger of, the payout ratio is just too high, or they just haven't been profitable for a while, or reason number two, when the fundamentals of how this company earns money has been changed. And right now, that is the case for so many of these brokerages. But the one that I'm interested in the most, and the one that I would consider switching to, is Charles Schwab, which is the one that is positioned to come out as the leader from all of this debauchery that they have caused. And they were the first giant, so to speak, to really initiate all these fee drops. As a result, everybody had to follow and do the same to compete. I did some digging into the SEC's website, believe it or not, for the 2018 annual income report. And here's what I found. It's amazing. Check this out. I found out that smashing that like button really helps my channel. But the other thing I found out is that they made $763 million from trading fees, which is a lot, right? I mean, I'd love to have $763 million, except it isn't in comparison to the nearly $6 billion that they generated in net interest revenue for 2018. That's money that's just their customers have sitting in their app, just chilling there, just in the brokerage, just not even invested money. Like right now in Robinhood, I have about $800 waiting to be invested. So all of that money in aggregate is generating them nearly $6 billion, which is just insane. And I think they're so smart for getting rid of all the fees, because think about it. Would you rather compete a race to the bottom over a measly $763 million? Or would you rather crush the competition, invite way more customers to come to your platform, and as a result, make way more interest on the new money that they're about to bring in? I know what I would do. I would cut my losses, bring in more people, and wake May more money. Just reverse that and make way more money on the interest that their cash is just gonna sit there in my platform. So I'm curious to see what the interest reporting will be like for this year. But if it was anything like it was last year, then they're gonna more than make up the $763 million that they've lost to commissions and fees. So the price drop for Charles Schwab, a little bit irrational, but for the other brokerages, I think it's justified, because now those guys are gonna have to get really creative how to supplement that lost income. Otherwise, they're gonna have to fire a bunch of people, and as a result, their support teams are gonna suffer, which could mean a race to the bottom. And that means that's bad for them. Don't know why I did that. You know what? Because I wanted to. Filming. So Robinhood is now at a huge disadvantage, mainly because while it was the first, it was never the best at any one thing. M1 Finance, for example, is one of the best apps to use if you want to automate your investments, if you want automatic rebalancing into different slices, and they even offer retirement account options. And I'm actually making a video about that very soon. In contrast, Robinhood does not offer retirement account options. Where have you been, Robinhood? You could have implemented that feature so many years ago, but you chose not to. So M1 Finance wins on the retirement front while doing similar things that Robinhood can do. This is nicht gut, Robinhood, yeah? WeBull is another great trading app that allows for free trading, just like Robinhood. It has amazing analytics tools, it has community and financial support, and it's for a very specific purpose, like day trading, because the orders get filled much quicker, it's more reliable, and they might just become the new gold standard for options trading once they make that feature available for free. So while some of these apps have carved out a very specific niche for themselves, I feel like Robinhood has just kind of spread themselves out too thin by trying to conquer the whole behemoth, and as a result, their support teams have really been lacking, and not to mention that their dividend yield reporting is sometimes wrong, and their stock prices sometimes don't even match my Google spreadsheets on Google Finance. When combined with a lack of competition for so many years, the disruptor that has been Robinhood has now become potentially the disrupted after keeping its place in number one for so comfortably long. Charles Schwab, on the other hand, has some very distinct advantages. For example, it has better margin rates, which I don't recommend you guys margin trade, but if you don't know what it is, it's basically borrowing money you don't have to make trades with. It also has a banking system where you can actually have a checkings and a savings account with physical ATM locations and zero fees regardless of what your balance is, which is pretty incredible because my Chase checking account charges me $12 a month if I don't have $1,500 balance every single day. That's insane. Another advantage they have is your savings account will make 0.37% interest, which I think is negligible, but it is a small advantage that's better than most banks. But one thing they do have is their debit card actually has 0 foreign transaction fees. So if you guys are traveling out of the country, you can use this debit card and have 0 foreign transaction fees if you don't have the Amazon Prime credit card like I do. And they also offer DRIP, or dividend reinvestment plans, which is when you get paid a dividend from a company, but then you use that dividend to then reinvest it back into the same company that paid you to begin with automatically. And while that's a very popular feature, I do want to be clear in saying that DRIP investing offers no financial benefit over non-DRIP investing. It just makes your life easier and more automated, but I do think that every brokerage should at least offer this feature to everyone for free. But the downsides of these big brokerages like Charles Schwab is that they've invested so much of their effort and their money on the infrastructure and less so on the user interface experience. And that to me is extremely important because I like to keep things on my phone. I like to keep them simple and intuitive. And I know that's subjective, that's just my opinion, but I do think that the Robinhood app experience is a lot better than Charles Schwab. But I will say that it's a lot easier to fix an app than it is to fix what Robinhood must be facing right now. So will I be making the switch? Well, I kind of already have diversified brokerages for different use cases, but my biggest portfolio that's my taxable account will still remain with Robinhood for now. I want to give them a chance to respond and see what they say because I don't think they're going to take this battle laying down. They'll have some ace up their sleeve. And yes, there's plenty of cheese where that came from, but from all the new bells and whistles from all these brokerages that they're gonna offer, none of them are quite high on my list of priorities because I'm a simple guy. I like to invest in stonks and I don't wanna pay fees for it. But what I do prioritize is great customer service when I need it. And I think right now, Robinhood is really lacking in that department. But you know what Robinhood does have that the other brokerages don't? Cryptocurrency trading, which I don't recommend you do because not your keys, not your Bitcoin. And the second thing is a whole subreddit dedicated to horror stories regarding options trading on Robinhood. It's hilarious. Definitely go check it out. It's a great source of inspiration and comedy. This is not at all a pro for Robinhood. This is just something to make me laugh. But if we do decide to transition brokerages, we can do that with the help of a CATS. And no, I don't mean like cats like meow, kitties. I mean with a process called ACATS, which is Automated Customer Account Transfer Service. And there's a small fee involved, but it automatically transfers you to another brokerage. And if I decide to do that, I'll make a video tutorial on how you guys can do that too if you want to switch. So I want to know your thoughts. Are you guys going to switch, or are you guys going to stick with Robinhood like I am for now? And while you guys think about it, I want each and every single one of you to enjoy your lovely weekend. Love you all, lovely people, and I'll see you guys all on Monday. Bye-bye.
Games, the one she played.